The annual inflation rate in the United States is currently around 7.5%, the highest it's been since 1982. It doesn't matter if you're a cashier, lawyer, plumber, or retiree. If you spend US dollars, inflation impacts you. Economists expect the effects of inflation, like a higher cost of goods, to continue. Luckily, an investment in real estate can ease some of the financial strain. Here's what you need to know about inflation, how it impacts you, and how an investment in real estate can help. You may notice a new background for this week's episode. I'm coming to you from our beautiful short-term rental in Port Aransas, Texas. Short-term rentals are one of the investment strategies to hedge against inflation. I'll speak more to this in just a bit. So what is inflation and how does it impact you? Inflation is a decline in the value of money. When the rate of inflation rises, prices for goods and services go up. Therefore, a dollar buys you a little bit less with every passing day. The Consumer Price Index, or CPI, is a standard measure of inflation. Based on the latest CPI data, prices increased 7.5% from January of 2021 to January of 2022. A little bit of inflation is considered healthy, but 7.5% in a single year is very high. So how does inflation affect your life? Here are a few of the negative impacts. 1, decreased purchasing power. That means you'll be able to purchase fewer goods and services with a limited budget. 2, increased borrowing costs. In an effort to curb inflation, the Federal Reserve is expected to raise the federal funds rate. Therefore, consumers are likely to pay a higher interest rate on new mortgages, car loans, and variable rate credit cards. 3, lower standard of living. Wage growth tends to lag behind price increases. As such, life is becoming less affordable for everyone. Inflation can force those on a fixed income, like retirees, to make lifestyle changes and prioritize essentials. 4, eroded savings. If you store all your savings in a bank account, inflation is even more damaging. As of February 2022, the national average for interest rates for a savings account is 0.06%. It's not nearly enough to keep up with inflation, and economists don't expect that rate to go much higher. One of the best ways to mitigate these effects is to find a place to invest your money other than a bank. So where is a good place to protect your money against inflation? There are several investment vehicles that financial advisors traditionally recommend. These include stocks, commodities. Commodities are tangible assets like oil, livestock, and minerals. Inflation index bonds. Treasury inflation protected securities, or TIPS, are U.S. government-issued bonds that are indexed to the inflation rate. Bonds are considered low risk, but the returns they offer are generally low as well. And of course, real estate. Real estate prices across the board tend to rise along with inflation, and often rise faster than inflation. That's one of the reasons demand for real estate is soaring right now. As a real estate investor, I believe real estate is one of the best hedges against inflation. Owning real estate does more than protect your wealth. It can actually make you money. For example, home prices rose nearly 17% from 2020 to 2021, 10% ahead of the 7% inflation that occurred in the same time frame. Plus, certain types of real estate investments can help you generate streams of passive income. In the past year, property owners didn't just avoid the erosion of purchasing power caused by inflation, they got ahead of it. So let's talk about these real estate investment options. There are 3 basic investment types that we recommend for beginner and intermediate investors. Remember, I can help you determine which options are best for your financial goals and your budget. The first one being your primary residence. If you own your home, you're already ahead. The advantages of home ownership become even more apparent in inflationary times. As inflation raises prices throughout the economy, the value of your home is likely to go up concurrently. At the same time, you've locked in a set mortgage payment for the next 30 years, so you'll be immune to rising rental costs. If you don't already own your primary residence, home ownership is a worthwhile goal to pursue. Though the task of saving enough money for a down payment may seem daunting, there are several strategies that can make home ownership easier to achieve. If you're not sure how to get started with the home buying process, give me a call and I can help you find the strategy and property that fits your needs and your budget. The second real estate investment is long-term rentals. A long-term or traditional rental is a property that is leased out for an extended period of time. An example of this is a single-family home where a tenant signs a 1-year lease and brings all their own furniture. Long-term rentals are a form of housing. For most tenants, the rental serves as their primary residence, which means it's a necessary expense. This unique quality of long-term rentals can help to provide stable returns in uncertain times, especially when we have high inflation. Be sure when calculating your income and return, you're budgeting for maintenance, repairs, property taxes, and insurance. You'll also need to have a plan for managing the property, but a well-chosen investment property should pay for itself through rental income, and you'll benefit from the appreciation as the property rises in value. I've owned and managed single-family homes for the past 5 years. If you're curious about this type of investment, I'm happy to share my experience with you and all my lessons learned. The third type of real estate investment, short-term vacation rentals, like the one I'm in right now. These function more like hotels in that they offer temporary accommodations. A short-term rental is defined as a residential dwelling that is rented for 30 days or less. The furniture and other amenities, like the dishes behind me, are provided by the property owner, and today, many short-term rentals are listed on websites like Airbnb and VRBO. A short-term rental can potentially earn you a higher return than a long-term rental, but this comes at the cost of daily hands-on management. With a short-term rental, you're not just entering the real estate business, you're entering the hospitality business too. However, if you'd like to stay as hands-off as possible, there are many management companies that will take on the entire process for you for a reasonable management fee. Their services include managing the property, advertising the rental on all applicable sites, scheduling bookings, coordinating check-ins and check-outs, cleaning the unit, and managing maintenance and repairs. I know great property management companies in Port Aransas, Corpus Christi, San Antonio, and the Texas Hill Country. Done right, short-term rentals can be both a hedge against inflation and a profitable source of income. As a bonus, when the home isn't being rented, you have an affordable vacation spot for yourself and your family, which is what me and my family are doing right now. I've done short-term rentals in both San Antonio, close to downtown, and here in Port Aransas. I'm happy to share with you my experience and all the lessons I've learned along the way. Inflation is a fact of life in the U.S. economy. Luckily, you can prepare for inflation with a carefully managed investment portfolio that includes real estate. Owning a primary residence or investing in short-term or long-term rental will help you both mitigate the effects of inflation and grow your net worth, which makes it a strategic move in our current financial environment. If you're ready to invest in real estate to build wealth and protect yourself against rising inflation, give me a call. Thank you for watching.